Tesla shares, they're down over 50% this year. The slide is starting to catch the eye of valuation watchers, including our very own Brian Sozzi. I didn't know you were a valuation watcher.
I'm a former analyst. This is what I do in my spare time. I try to keep those valuation chops humming. I will not forget all the stuff that I learned over 15 years. But nonetheless, I did a deep dive into Tesla's valuations. And our friend of the show, Dan I, is pointing out to me, this is Tesla stock is now valued at some of the cheapest levels he has ever seen, at least looking back over the past 5 years. Let me take through a couple numbers here. You see on that screen, Tesla stock is trading at a 70% discount to its historical average forward price to earnings multiple. That is just absolutely eye-popping. 63% discount to historical forward price to EBITDA multiple. And then lastly, a 59% discount to historical forward price to sales multiple. I know a lot of technical terms, but the bottom line is this. As Tesla's stock, or as the company has lost almost about $280 billion in market cap year to date, these valuation metrics have come down. This is the streets or investors' way of saying in real time they are concerned about the future operating profits and cash flows of a Tesla. Now, why are these concerns, in fact, rising on the company's cash output, let's say, looking out over the next 5 years? A couple very, very simple reasons here. First and foremost, Twitter. Of course, we had that Goldman Sachs, that cautionary note out from them this morning, acknowledging that they see this Twitter situation with Musk as polarizing and as a risk to the stock. So check done with that one. Again, concerns on China manufacturing output. We have seen that in recent months weigh on Tesla shares. And then rising competition. I think if you look back this year, you will have seen this was the year GM, Ford, and a lot of other automakers, I would argue, finally start to catch up with Tesla in terms of the electric vehicles they're making. Of course, I think it was this week, Ford won that Motor Trend Auto of the Year award with electric F-150, which is very interesting. My take is this, though, looking forward into Tesla. Your deep thought for today, folks, is Tesla stock really cheap? And I say that because, and there is our team.
Glad we're catching a ride with you.
I think that's a Tesla.
Out the sunroof.
That's a Tesla. Now, the stock is still valued at a big premium to the broader market. Now, Tesla stock probably shouldn't trade at a significant discount to the broader market, but still, with all these concerns swirling, it is probably just better to wait to see how things shake out before you can ultimately say this stock is too cheap to ignore.
It's interesting, especially trying to figure out how much investors have been looking through some of the production issues, looking through the Elon even headwind now that exists with Tesla, and trying to figure out, all right, what does that mean for the ability to produce in the future and just the focus that Elon has on this company right now, too.
Yeah, you have to wonder if these distractions are playing out. When does it show up in Tesla's financial statements? So something to keep an eye on. And of course, add this disclosure, this is not me picking any stocks. It's just providing a valuation framework on how you should be thinking about it if you are interested in buying or selling Tesla shares. It's important to do this valuation homework.
How do you factor in refusing to pay rent on
I knew you were going to mention that. You're not going to let it go.
Into your valuation model?
I'm not even going to reply to you. Time to go to break.